Why don't we move on now from a big fat price on carbon to somebody who really knows the intricacies and the details of global energy markets and carbon markets, and that's Fatih Birol. Fatih, thank you so much for coming. Fatih is the Executive Director of the International Energy Agency. I guess on November 16th, you have the annual World Energy Outlook coming out, which everybody turns to as a guidepost on how much progress we're making. 1 year into the Paris Agreement, are you more or less optimistic than you were, say, even a year ago, about the world's ability to meet a 2-degree target for increases in temperature by the end of the century, much less 1.5 degrees?
Thank you very much, Keith, and thank you very much for two things. First, inviting me here, and I am a very good reader of newspapers, still the print version, and New York Times is doing a very good job on the climate change front. Please go ahead, regardless of what happens in the next days to come in the United States. Now, energy. To talk about climate and not to talk about the energy realities are, in my view, a big mistake, because more than 2/3 of the emissions causing climate change come from the energy sector. The other 1/3 is different parts of the economy. Therefore, without making a major change in the global energy system, it is impossible to find a solution to climate change. It's number one. Number two, Paris Agreement is excellent. Very important political momentum internationally. But as an energy man, I look at the data. I make my hands dirty with data. Now, we talk about carbon price. Okay? $6, everybody is surprised, $6. But more surprising is that before the Paris Agreement, before we didn't know there's an agreement or the countries come together, the price of carbon was $9. So it went from 9 after the agreement to $6. It shows us the market impact of the Paris Agreement may be not as strong as we all think. So we have to be realistic here. So I will try to make, not political, but from an energy perspective, put the things in a perspective. What is happening now is two good things. One, renewable energies are growing very strongly, and they did take over the coal as the number one source of power capacity worldwide. Very good news. And second, energy efficiency is improving. How we use energy, it is improving for the cars, for trucks, and for other things. But if you tell me, are we in line with the Paris Agreement, I will tell you, no. We are far from the goals to reach, which was set in Paris in terms of energy sector, because there is we talk about France, very nice, Norway, Sweden, but the demand is coming from Asia. What is happening in Asia is very important. Today in Southeast Asia, the biggest chunk of the investments are going coal-fired power plants, and most of those plants are subcritical plants, very, very low efficiency. So we have to look at it in a role, because 1 ton of CO2 going to atmosphere from Lille or from Stockholm, from Detroit or from Shanghai, they have the same effect for everybody. So therefore, we have to look at the global perspective, and unfortunately, I would say that although there is a political momentum, this political momentum is not yet translated into major transformation of the energy sector. There are some good news, but we are not in the on track.
One category in which we hear a lot of people saying, oh, well, we're doing better, is the electrification of cars.
Yes.
There are ambitious plans by practically all the major automakers to put out a lot of electric cars. But based on the growth paths that you're seeing now for electric cars, do you expect that will even be enough to stop the rise in oil demand? Or even with those electric cars, will oil demand continue rising in the years ahead?
I think this is another important issue that one needs to put into perspective without discouraging the innovation. Now, electric cars last year they made a major breakthrough, and we have seen that the number of electric cars sold was record levels. It is 550,000 electric cars were sold, which is much higher than the previous year by a factor of X. But this was less than 1%, 1 out of 100 cars sold was electric cars. And I don't buy the argument that the electric cars alone will cause a peak in oil demand, at least in the short and medium term. Why? Because bulk of the oil demand growth is not coming from cars. It is coming from trucks, aviation, and petrochemical industry. And we don't have major alternatives to oil products here. In our calculation, I can tell you now, as of tomorrow, so you have the electric cars outside. If everybody suddenly fall in love with those cars, and entire world will start to buy electric cars, and if every second car sold in the world was an electric car for next 20 years, we will still not see a peak in oil demand. Oil demand will still grow as a result of trucks, aviation, and petrochemicals.
That's even if we went to 50% market share for electric cars beginning with 2017.
Yeah.
For the next 20 years, you would still have a rise in total oil consumption.
Definitely, because the cars, they themselves are not the drivers of the oil demand growth. It is the trucks, jets, and petrochemical industry. So therefore, we have to, as I said, we have to look at the numbers without picking up a couple of examples here and there, put in a global perspective, and getting inspired is very good, but not to be too enthusiastic and to forget the global picture.
Okay. To what extent do you see progress in addressing coal demand, particularly in India? I mean, one of the questions everybody wonders is if India follows the same infrastructure-intensive and coal-intensive track that China has, it's going to be almost impossible to reach a lot of these Paris Agreement targets. There's certainly some ambitious plans for more coal-fired plants. In India, the Chinese want to sell them more. Where is coal demand in developing countries, and particularly in India, going, and where is India going?
Now, globally, coal demand is now flat, and half of the global coal is consumed in China. Half of it is China, other half the rest of the world. And it is in a decline in China, 2014 and 15, very good news for the environment. And Chinese are doing not for climate change, they are doing it for air pollution. We have to also register this. Air pollution is a major issue, the air quality in the cities for the developing countries. So China, it is flat. OECD countries, rich countries, it's going down, but it is increasing in India and Southeast Asia. But again, putting things in a perspective, trying to put it in a perspective, the climate change issue is not an issue of today and tomorrow, but it's an issue of yesterday as well. When you look at the last 100 years, the rich countries of today and China use a lot of coal to get cheap energy and improve their economy and put a lot of carbon in the atmosphere. It is already there. So we are talking first about that carbon. Now, India and other poor countries say, it is now my time to develop, to get the cheap energy, and you cannot ask me to sacrifice. And I see a fairness point here, to be honest with you, in the absence of support for India. And today in India, 250 million people, half of Europe, they have no electricity. So put things in a context here, and therefore, India has an ambitious coal program, an ambitious solar program, and but the coal program says doubling of the coal use if it is done, and if it is done not by the best technologies available, it may well have implications for the climate change, together with, as I said, Southeast Asia, Indonesia, Thailand, Malaysia, and other countries.
One of the points that you've made in the past is maybe we need to think about adaptation. Now, that's a very unpopular view with some who say we should focus all of our energy on preventing global warming in the first place. Do you think, what kinds of climate adaptation steps, improving resilience, perhaps particularly in developing countries, do you envision as things we need to do?
And this is a very important point. We mainly talk about mitigation, but the chances to reach, as it was mentioned in Paris, well below 2 degrees, 1.5 degrees, is how much we will see in the world energy outlook. We look at what needs to be done in the energy sector to come to 1.5 degrees, and the results are striking. Therefore, even if we reach our nation-determined contributions, this will bring us to a 2.7 degrees Celsius. And they are, as we all know, they are not mandatory if we reach it or not. And the difference between 2.7 degrees and 1.5 degrees Celsius is not something that you just take your jacket off and adapt to life. It is much more serious than that. So therefore, in my view, there is a need to take the adaptation seriously, even though there is a strong political momentum for mitigation now, especially for the most vulnerable parts of the world. This is not only in terms of the extreme weather events, but in terms of lack of water, and in terms of the impacts on the energy sector. For example, offshore platforms in the extreme weather events, they will be much more in trouble, and therefore to build more resilient offshore platforms means much more capital, money to put here, more expensive.
I'll never forget after Typhoon Haiyan came through, which was far, far, far beyond even a Category 5 storm. There were even reinforced concrete buildings that were damaged. So really, almost nothing can withstand these storms when they really get going. What about the solar photovoltaic market? I noticed when you came out with your study last week that you show the very steep decline, which everybody's seen in solar costs until now, but then not quite an inflection point, but certainly a slowing of those gains. Does that make you a little bit more concerned or pessimistic about the ability of solar to really take up a lot of the electricity generation capacity in the next 10 years?
Solar is booming. It is a very good news for two reasons. One, cost of solar went down substantially. In the last 5 years, it went down in real terms 80%. There is nothing in the world, I think, whose cost went down by 80%. It's excellent. Second, there is a strong, continuous support of the governments, many governments in the world. Now, if that support continues, I think we will see still an increase of the solar, but there are two countries which are very important. At least one of them is crucial, which is China. China is today, by far, the champion of renewable energy, full stop. So this is, including solar energy. But Chinese government support for solar, we have seen recently, may well be not as strong as in the past, and this may well have implications for the penetration of solar in China. When you say China, it is more or less the half of the world in terms of the numbers.
So where do you see renewables cost parity with fossil fuels going then if the downslope of solar is slowing, and as we see low oil prices and low coal prices because of overcapacity in production? Have we delayed the day of cost parity?
I think in many good sites of wind and good sites of solar, we get some parity already. But it is not only looking at the grid parity here. There are many other issues the investors take into consideration. Renewables are facing today some challenges. The first task we had for renewables was to reduce the cost. Now we are able to, we mean the world, we are able to do it. It is very good news. It is becoming cheaper, and more renewables are coming in the market. This is also very good. But now, with the increasing share of renewables in the electricity generation, given the intermittence character of the renewables, we are seeing some challenges. Some of you may know, I don't know if you have colleagues from Australia here, in South Australia there was an issue, a serious issue, together with the extreme weather events. So therefore, it is very important The second phase of the renewables issue is how to integrate the renewables in the electricity systems in a secure way and in the most economic way. I say most economic because in some countries, there are many renewable farms, wind farms, solar panels, which are idle as there is no need for them in the grid for the time being, and that investments are debt investments. So therefore, how we are going to put it in the context there, which is very important.
Okay. Thank you very much. These are all very good points. We really appreciate your coming. Thank you. And with that, I'd like to hand you over to our next moderator, my colleague Adam Bryant, who will talk about climate action and carbon pricing. Thank you.